So welcome everybody. Sorry for the delay. We had some problem with some technical problems, but hopefully they are sorted out. Pretty much in discussion of what happened last week and knowing what's going on this week in the market, we all know the German-Greek or the Euro-Greek negotiations that's going on. And the statement that came out of the Greek Prime Minister that a deal will be reached. Nobody knows what deal that would be. The bottom line is I posted my remarks on that deal or the events that's happening on the deal last week. A couple of days ago, I posted it on Facebook. I will just add it for you here, just as a brief, pretty much. The idea is that Germany needs, in my opinion, needs Greece much more than Greece needs Germany, because if push comes to shove, Greece can go and ask for help from the United States, from Russia, from China. I posted it all for you in the chat, and it's available on our Facebook page. To cut a long story short, a debtor, a company that is owed a lot of money, will do its best to maintain the debtor's longevity so that it can ensure that it gets paid. That would be the primary thing, that why Germany would try to keep Greece in the fold. But that is not the only reason. There is a primary reason, which is now the world is in a global depression, and Germany needs growth, needs the ability to export, needs the ability that the world would have demand for German products. And in order to do so, it requires that the euro should be at a low rate, so that it makes the German goods and services quite affordable for the makes the goods and services affordable, and people can buy the German products. As you've seen last week on Thursday, I think, the numbers that came out of Germany was actually very good numbers, that there was growth in Germany, and it was, as I said, very good numbers, and this is what the Germans want. And for them to continue having this kind of success and this kind of strength into their economy, they need to keep the euro at a lower rate. And in order to keep the euro at a lower rate, it must keep the weak economies in the fold. It must keep Greece, it must keep Spain, Portugal, Italy in, and does not allow anybody to go out, because if these weak economies are in, these weak economies will demand financial support, will demand financial easing from the ECB. And as you have noticed, or as you know, that the ECB has announced that they're going to pump 1.3 trillion euros in the system during this year. And of course, if Greece goes out and the other countries go out, there will be no reason to do this kind of pumping. And if they do this kind of pumping, what this would mean is that the euro will continue to remain weak. Just as a reminder, you know that in the midst of the economy crisis in the United States, the U.S. pumped about $4 trillion. The Federal Reserve Bank pumped $4 trillion. What you see in front of you is a chart of the dollar index, and this is 2014, 2000. But if you really want to take a good picture, in 2008, 2007, when they started pumping, this is what happened to the dollar. It came down from 98 all the way down to 78. This was the bottom, pretty much where the financial easing has ended or has been resulting, and then as a result of the financial easing, the dollar came down all the way to 78. Once it has reached this state, the demand was very high for the U.S. goods and services, for products, for tourism. Everybody was coming to the States. It was cheap. Everything was dollar-based, was extremely in demand. And as a result, we have seen that the economy has turned around, and with it, the U.S. dollar has turned around. This is the image that Germany wants, and this is the image that Europe wants. Europe wants to see the euro come down like this, because if it comes down like this, then the economy is going to turn around and go up at the following stage. So by doing so, and by finding a way to keep Greece in the fold, this will mean that the euro will continue to decline and remain weak. And with the weakness of the euro means strength of the German or even the northern part of the eurozone. And that is pretty much the bottom line, why they're going to agree to do what they have to do to keep Greece in the fold. Now, with that, if we're looking at these charts so that we can see our indices and what we are going to do with the so by looking at the dollar index, so right now, because we have the situation in Greece, and we first need to look at the euro index. So by starting first at the euro index, and as you can see here, the euro, even though we have this bad news of Greece might be going out and all the negativity that's happening, but the euro is kind of holding its level. It's not declining. It's not being sold off. And it is not being sold off simply for two reasons. First, if it's sold off, this means that there will be no agreement with Greece, and therefore the euro will capitulate. So that gives us an impression that wise money is betting that the euro is not going to be broken down. Two, that kind of movement here, that means that if an agreement is going to be reached, it might not be the best agreement that they are looking for, but it's not going to be a bad one. And if it is not a very good agreement, this means that the euro would weaken further, not because of Greece leaving the euro, but because of the European economies. That would lead to some short covering rally. That would lead for the euro to push a little bit higher. And right here, this is our structure point on the index, which is 15, it's 115.30, 115.33. It's 115.39. And of course, if the euro gets above the 115.39, this would mean that that's an intraday structure, and we should get a rally, a short covering rally. It is not a trend change. It's not going to change anything in the fundamentals. All what it means is that there will be a profit-taking move in the euro, and they will be covering their shorts, and the euro should be flying for a short period of time, which is a corrective wave. That correction will begin if it trades above the 115.39 based upon the index. If we're looking at the euro dollar itself, you will see that it's pretty much the same, but it is 115.30 actually, not 39. It's 115.30. Okay, so if we're looking at the euro dollar, you're looking at 115.33. If you're looking at the euro index, it's 115.39, which again, because the dollar is a major component of it. So any move of the euro above the 115.33, this means we're going to jump in and buy the euro. We're buying the euro dollar, we're going to buy the euro yen, we're going to buy maybe the euro pound or the euro Aussie or the euro New Zealand. We're going to pick which ones, and the euro CAD. And this is the trigger point for the euro dollar. If we're going to look at the opposite side of the equation, which is the dollar, you see the dollar is flying, it's moving, but the same setup that you have here is the same technical setup that we have in the euro dollar. We have the failure, we have a structure point. So as long as the dollar stays above the 93.38, then this means it is okay that the dollar is still in a bull market. Even if it breaks below the 93.38, we're going to be shorting the dollar, but it is not a trend change, it's a correction. This is an intraday structure. So we're going to look at it in that format, in this kind of fashion. So if the dollar breaks below the 98.338, we're going to be selling everything. We're going to be throwing the baby with the bathwater. And if the euro goes above the 115.33, we're going to be buying everything that has the euro. These are the two major events for the coming week. Okay? Now, if we look at the pound, the British pound, you would see something also quite interesting. You would see that, and we have discussed this a couple of times ago, we do have two intraday structure points. This is one here, and this is the other there. And this is a higher low. So technically wise, actually we have three structure points. Not two, we have three. And it's not of a big magnitude, but again, it's happening. So you see that the pound dollar broke above the 152.23, the first structure, and they closed above it. Then it traded above the second structure, which is the 152.61. And then it traded above the third structure, which is the 153.45. And on Friday, it closed above that structure point. And that is a very strong technical setup. And you begin to see that in the UK, there has been some discussions about the Bank of England pushes towards a rate increase even though inflation sinks weaker. This comment was just about 2 hours ago. So there is now some hawkish noise coming out of England. So this will tell us that the pound is something has technically led the way, and now the hawkish news is coming from behind. So in this case, we want to be doing the following. Let's go back to our dollar chart. The way we are going to be doing it, the pound is the strongest currency. Then we have the US dollar. Yes, it is strong, but it is setting up for a correction. So we're going to be neutral on the dollar with a negative bias. But this means if it's above the 93.38, or it is giving us any other buy signals, we're going to be buying it. Then we have the euro. Which again, we know it's a weak, but we're going to be looking at it in a neutral way, but with a positive bias, because again, it will just push higher if they're going to get any short cover. So these are the primary three ones. The next one we're going to look at is the Japanese yen. Oh, come on, don't do that. So we are going to look at let's take the Australian dollar. We know the Australian dollar is quite weak. And as you can see, it is remaining in the weak stance. So we are going to remain negative or bearish on the Aussie. If we look at the Canadian, same story. It looks identical to the Aussie. The CAD and the Aussie look the same, identical. And of course, last but not least, let's get the Japanese yen. Why is it? This is the Japanese yen, and as you can see, it is moving pretty much sideways in no man's land. The bias is still to the downside. So if we get a short covering in the euro, which is going to be followed by a short covering in the pound, it might push the euro to the downside. I mean the yen to the downside. So the way we're going to look at it is as follows. We're going to look at the euro, the yen. Negative, neutral, let's say, with a negative bias. We're going to look at the Aussie negative way. We're going to look at the CAD in a negative way. And we're going to look at the New Zealand I don't have the, if you look at the chart for the New Zealand, as you can see here, it is still in a bear market. This is a correction. So this is a good setup for us to take it to the downside. So, but we're going to look at it also in a not as negative as the Aussie, not as negative as the Canadian, but we're going to look at it as like the yen, weak, neutral with a negative bias. So we're going to be negative with a positive bias. So the first thing we're going to do, we're going to start looking at the pound. This is the first one we're going to be buying. Technical Canadian is weak. Canadian is weak ourselves. So we're going to be looking at the pound in a buying sense. We can look at buying the pound yen. We can look at the pound Aussie. We can look at the pound CAD. We can look at the pound New Zealand. We can look at, if you like, the pound dollar. So the primary currency we want to be buying this week is the pound. And we're going to start with the pound yen, pound Aussie, pound CAD, pound New Zealand, and the pound dollar. We can look at the euro also, and the euro yen, because there has been a lot of profit done on the short side on the euro yen. We can look also at the euro Aussie and the euro CAD, and of course the euro dollar if it gets above the 115. So if the euro dollar gets above the 115, then we're going to take the euro dollar. Okay, so this is pretty much the plan of how the pairs we're going to be trading. So now let's start taking them one by one. So to start with, let's start with the yen pairs. So we will start with the pound yen. And as you can see, this is actually a pretty good chart. We have this structure point here, which is this structure point here. Oh, come on, give me a break. I really can't tell you why it's stuck. I have no idea. Guys, the computer is not working with me right well. I can't even manipulate any of the charts or do anything. So I can't even take you back. So my suggestion would be is we're looking at the pound yen. Tomorrow I will be in the room, in the trading room in the morning. Tomorrow is also a holiday here in the United States. It's President's Day, so it's a big holiday. So the market will be rather thin. I will try to finish these points and I will post them on YouTube and send you the link. This is getting, I don't know what's wrong with it, and I need to uninstall the whole TradeStation and reinstall it again. So I'm going to do that. I'm going to record it and I'm going to post it on YouTube and I will send you all the link. Okay? I mean, there's nothing I can do. I mean, this whole thing is just stuck. All right? So I'm sorry about that, but there is nothing much I can do. I can't even change anything. I don't know even if you're hearing me or not. Is anybody hearing me? Hello? Okay, so I have to uninstall and install everything, and I will do the recording, quick recording with the points, and I'll post it on YouTube, and I will send you the links, okay? And I will see you tomorrow in the room. I'm sorry about that, guys. Okay, take care.